Good afternoon. Welcome to Options Tenor. It is Tuesday. Happy short week here, everybody. Thanks for joining us here. We're going to go through SPY on multiple time frames and focus on the Qs as well on the lower time frames. Take a look at traditional technical analysis and a couple other indicators, Elliot wave and such. The market is telling us that price wants to go lower. We had a break of a range today, so we're going to go through that. And then where price could go to, and also a measured move. So we'll go through all that in this video. We're doing this about 2:20 Eastern Standard Time intraday. If you want to get these videos intraday, if you're interested, then consider becoming a supporter for 99 cents. And then we did a members video today as well. That's I believe that's $3 or so on YouTube membership. So let's jump into it. We have SPY on the monthly time frame. We have the 2000 top, 2021 top, and we're forming a top here at 2024 here. And so we're looking at this being we have our hangman possible candle, also tweezer top formation. And we're getting a little bit of downside here so far. So this could be the top. This is possible. We do have a Fed pivot. When the Fed pivots, sometimes price is already headed to the downside, and sometimes price goes a little bit higher before reversing. So we don't know for sure what's happening here. You see this top took virtually 3 months to happen. On that third month, you had a nice down move. It could take time. So we're forming a top here right at the 2000 and 2021 top here. And we'll go to the lower time frames to show you what else could occur. So we have this consolidation here that we tested already. I do think sooner than later. And on this time frame, what I mean by soon is, 3, 4, 5 candles. That could be 6 months from now that we test this area here. But I think price will go down to that point. It's just a matter of when. Is it this year? Is it next year? I don't know. But that's what we're trying to figure out as price gives us information. Let's go to the weekly. On the weekly time frame, traditional technical analysis, we're just testing the top of this channel here. It doesn't appear that we're going to get the top of that channel again at this point. We have a potential reversal candle, and we're starting to follow through underneath there. So on this time frame, that's the important thing to look for, is a close underneath this possible potential reversal candle. And we're starting to break that. We're starting to breach that now. Do we close the week under there? We'll see. But you see this good level here. You have this low connecting with this low, this high here, this wick, low, and a high. This is an amazing and very important level. So on this time frame, we'll call it about 554. And we're getting to the 8 EMA, so there's possible that we get a reaction off the 8 EMA on the weekly time frame. So we're in a bullish stance, but if price gets underneath this 8 EMA, the momentum is lost, and we're looking for the trend, whether it's going to hold or not. I think this is more of a likely place that we'll at least test and probably wick through, and we'll kind of get a gist of where that is. Well, right now it's if we look over to the right here, it's 539, about 540. So 540 is probably going to be an important point here, and so we'll check that out on the lower time frames. So looking at this other board, we had our final target hit at 162, retested it, did not make a new high, getting a reversal right at this time and price 9291. It's the week of, so we got that reversal at time and price, so we can take this off now. We said it'd be a critical point, and that's what happened. We got a reversal off of it, so I do think this continues. So I think our primary pathway, in my opinion, is we possibly have a top in from here. But since we did not, we left unfinished business, it can be a double top and we continue lower. But this also leaves open that we could get our pullback and then make a new high before going lower as well. But everything's satisfied at this point. We had our targets. So there's no reason that price has to go back up. Okay, that's just a scenario that we're going to have to keep in mind. So we held this 23% pullback here. So even if we make it all the way back down here to the 382, it's still considered a possible wave 4 down here and make new highs. So the possibility is there. In other words, if and when we get down to this point, we're going to have a reaction. So do we get down here by this time frame? That's the next one. We're looking for about the middle of September for some sort of time and price action here. So that could be lower, or if price is up here when that comes into play, then we'll be looking for a reversal at that point. So time won't tell us where we're going, but we'll be looking for a reversal at that point. So just like this one here. So let's go to the daily time frame. I hear my dog barking in the background. All right, so traditional technical analysis, we have a bearish rising wedge. We overthrew, had a possible channel. We had a lot of confluence up here that we reversed through, had a fake break and started to break down from there. Broke down from the wedge, back tested, couldn't hold above it, and had just a huge move to the downside. And so, that was a fake break, huge move, and then recovered, a V recovery here into the Fed pivot. So technically the Fed didn't pivot with rates yet, but they already acknowledged that it's time to start to move rates down. So here's the important thing for this. We had this consolidation here. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. 10 days. That's 2 weeks sideways. We're breaking that. We broke that area right here. And I think I said 554. On this lower time frame, it looks more like 555. So whatever that range, 1 point range there, we're breaking down from that. So a close underneath there, and this thing could drop pretty fast here. So I definitely wanted to get this video out to you. Because of that, price could accelerate to the downside after that. We did not know what this consolidation, it looked like going into Friday that price wanted to make an all-time high and then reverse from there. Now, we didn't complete that, okay? We got a new high above here, and I believe SPX did not, but SPY did. So that's another clue that this is possibly just a reversal here before getting a new high. So something to keep in mind. Okay, so we have price could accelerate from this point. You do have the 50 and the 20 here. So you should see a reaction off the 548, 549. But I do believe that price could accelerate down to lower areas here. And what we'll be looking for structure-wise, and you notice I have this is time and price both in here. So I do think we're on that pathway. But looking at from a different perspective, what I think is possible now, if you're a bull, you said this is wave 4 going into that 23.6 retracement. Okay, we had an ABC, and we're looking for now, this still can be considered a consolidation area because we didn't make a new high. We're up at the highs, reversing off of it into time and price. So we have this. We can take that one off here. We got a reversal. And then if you're a bull, you can be looking for this. Yes, some people could say this is a wave 4 or so, but the deeper this pullback happens, we can consider this as a bull, a wave 1. It's a nice impulse move, wave 1. And get a sharp zigzag into wave 2. So maybe that is where price stalls here and gets a slight reaction off of the 549. You get a move down here, maybe a slight bounce, and then the zigzag 535, and then that would be the 50% retracement. If this is going to be an ending diagonal, we have no idea how low this is going to get. Could get down to the 530. It could be much deeper. Okay, being more of a range play. We'll have to keep a look at this and the Qs as to get clues to whether or not when we're going to get a bounce at minimum or new highs. Okay, so this could be a 1-2 and setting up for 3, 4, and 5. That would be the 2021 playbook that we've gone through over and over. 2, 3, 4, and 5 into a shallow target at the 127, but there is a target above that if price wants to continue higher to the 600 area. My dominant scenario is that we got a reversal here, and we're looking for price to continue lower. We break these lows here, and we go to the 382. That would be our next spot where we expect a some sort of reaction. Okay, and so this really could be a leading diagonal for 1, pullback for a deep 2, a double top, and you'd get wave 3, which should continue lower than this 382. All right, let's go down to the 65. So again, we have time and price going in this area. So we'll see if we get this sharp move into a couple days, 9.6 here or 9.11. That both of those play into that low there. That's why I have the range of where we could find a low. Going to the 65. First, our traditional look. There's our wedge, a back test, and we broke down from this consolidation. So one way to look at this breakdown here, yes, this could back test. First of all, we know that the move is probably a fake break or so if we get back above this 555. As of right now, we're breaking down from it. It's also the move outside the options expected move. And so price could accelerate from that point with the big guys hedging and whatnot. That's a whole nother conversation. But we have this trend line. I moved the trend line since we made a new high here. So I moved it to this low here. We broke that earlier. So that was the first signal. Now we're breaking the lows of the rectangle that we had here. And one way to measure this is if we just take a line and we'll keep this as maybe a red line here. And this will be the measured move. So you have this from top of the zone to the bottom of the zone. And you take that from the breakout point. So that leads us right into the that 540, really 9 area. I know that's a little bit above. You have the 200 moving average. You have that, I believe, the 50-day and the 20-day moving average that we were talking about right in this zone. So this would be a nice zone for price to get to possibly by tomorrow, and maybe have a reaction off of. Doesn't have to hold. That could be it for the move, for the retracement. But I think that's where we'd get a reaction and then possibly lower here. So I'm looking for a zigzag at minimum. So 1, 2, 3 wave move. If it continues lower with a 5 wave move, then maybe this is a impulse wave. We get a lower high, we continue lower. As of right now, we are trading this move into good support here, time and price, into the 530 area. Much lower to go, but we just got the break. At minimum, we're looking for this measured move at about 547. And there's a good support there as well. Previous breakout point here, and then a breakdown. And just move this over, and that's exactly into that support. So just let's keep that support in mind. It starts to get into the gap. Could get a reaction off there, but I do suspect that this move will be lower after that. So that would be a good spot to hedge. All right, so I constantly hedge. I'm not looking for home run moves. I'm looking for base hits. We have our swings to the downside, and then I want to protect those swings. So when we're holding this spot here at the options expected move in the bottom of the rectangle, I added on a couple days out a couple calls, and also we're in Lulu to the upside, and we did that trade alert today. That's for individual and individual analysis and supporters on YouTube. And we're looking at Tesla was a trade alert to the downside. So we got that while Tesla was positive all day. So a nice pairs trade going on here. So what could happen is we could possibly have our move lower. And this could go, if it takes longer, it could go into FOMC. This isn't a finite area. So, but what I think might happen is if we get down to these levels, then we probably bounce into FOMC. That should be an indicator for us. It should accelerate price. And the way the market works is, I bet you this pulls back into like the 62% retracement or 50% retracement of the initial move here. And going into FOMC, I think that will either accelerate price or accelerate price to fall here. So I think there will be more of a controversial spot, I should say, if I may, going into FOMC. Now, what happens after that, who knows? We'll have to react off of that, but we'll be in a neutral position by that point anyway. So, all right, looking at the Elliot wave and the Fibonacci's. So I left this up here just in case the rectangle broke to the upside. I'm going to take that off. It has broken down at this point. So I don't think that all-time highs are going to be hit here. If we break back above 555, then I think this was likely some sort of complex A, B expanded, and then C impulse down here. And then we get a new high. So I'll definitely keep that in mind. I'm already hedged from this spot anyway. So I think that's less likely now that we had a breakdown from the consolidation area. And now I know we have a cluster here, stuff, time and price. Get rid of those, the 9.4s. Boom. A lot of stuff happening on this chart. But we'll look for, lows going into some of these later dated items. And we have a couple clusters here for that to happen. So maybe we get our bounce into 9.6 or so later on. But again, we have our retracements here from top to bottom. If you're looking for this to be a wave 1, a possible wave 2 retracement would bring us right into this 62% retracement at 530, which coincides perfectly with this trend line from the traditional technical analysis. So that's just a wonderful target there for a reaction and lower, or again, acceleration to the upside, where we have some higher targets. 580, I think, would be the likely, but there are targets above there at 599 to 600. And how do you get that? That's the retracement here. You have the this correction. We have the retracements, which we already exceeded all of them, and except for the 100% clearly. And then after the 100%, you have your retracements, the main ones being 127.2 and 162. So if you get above 127.2, I think the more likely place is the 162% retracement at 599. All right, so we have all of our targets and stuff, but what is this going to look like on the Qs? And that's, we always have to watch to see what they're doing. Is this driving the market down? And I think so. So we made a post here to the public that price was at a critical area. So not only was it at a critical area on SPY with that consolidation and broke down from that consolidation, we had a potential flag, bullish flag. So we're breaking down from that bullish flag right now. That's super important because that's very negative. And so again, price could fall or accelerate tomorrow, gapping down more. We're closing the gap now, so that's why price is kind of halting for the second, so I can close that one. But price could easily gap under this support area and continue to go lower. Now, I have the 9.3. I wasn't sure. This is a zone here, so it's going to look more likely to be, and it could be lower because this is a falling pivot here. So either way, and our minimum that we talked about on our trade was at 445. So our trade alert. So that's where I'm going to start taking off profit there. But this could easily, extend out to, like the 12th or 10th, wherever the other time frames are. So that could be like this, because that's the breakout zone. But it could also continue lower to backtest there. So we have all of these spots here that price could go to, and we'll have to protect our positions as price gets there. So here's our retracements. And this is also the reason right here. We have the 382. This is why it looked like this flag. This flag was coming into the 382. So from this move here to the move here, that could be a possible wave 3. And so a pullback for wave 4 is very typical at the 382. So that's why this was an important area here. I can take it off. We broke down from that area. If we break back into that flag and above the 382, we'll call it for about 466, then we should also see that fake break in SPY. And this will probably lead to our next targets to the 786, which has not been tagged yet, and higher the 887. I think ultimately we might look for the 887 if we look for new all-time highs in SPY. I think that that would close the gap here, and I think we'd have a lower high in the Qs. So that's the most bullish scenario that I have for the Qs. But going into our retracements from this entire move would be the 50% here, the 454. And again, time price, I don't have it. We're not clearly going to make it down here today, but going into like the 12th or so, so we have some room. So we can make it down to 447. That would be 62% retracement, and that would be exactly what the breakout area that I was just talking about. So we're likely to see at least a reaction off of that one, but really, if Qs are starting to break down and Tesla starts driving, some of that as well as the other big tech stocks, we could easily see the lows here, there, and even all the way to the 887. Okay, so that would take us to 436 or even 430. I know that's a massive zone. It's not telling you, it's not giving you answers of where, but we need to see the structure kind of form too. So we had a high here. This looks like a possible A and then a B. And now you need to see a 1, 2. We're going into wave 3. Some sort of reaction. Maybe the 3 comes down here, and then the wave 4 and 5 lower. So really have to be careful on how low this one could drag us. Now, another thing to look at the same time is not only the VIX, but if you take a look at SMH, this thing is really leading to the downside, okay? So with this, you still have some structure that will have to play out. If this continues to drag, look at this. I mean, you have your downtrend line, and then you have a really good uptrend line up here. So if price wants to get all the way down here and test the lows from here, then the Qs are probably a little bit higher. But so if this is already down to the trend line and forming some sort of double bottom, then you know that the Qs are looking for a possible bottom at that point too. So you got to look at all of these Qs here, and no pun intended. So all of these, tea leaves, and look at this. I don't think the price is done going to the downside unless we see a nice big spike through, or a wick through this level. We're getting past a beautiful level again at about the 19. We have resistance, support, and a breakdown here. Now we're getting back above it. Although we might pause here because of the gaps, and we're getting to the gap in the Qs, this thing I think is probably going to gap over tomorrow or so. So we're starting to form, we're starting to break out from this inverse head and shoulder that I was talking about last week. And then we back tested. I said here, I said we could go a little bit lower. We did. And now we're getting a move, breaking resistances, getting above. Let's go ahead and go to the daily so we can see that here. And this whole entire move, this massive move to the downside, really just retested this 200-day moving average here. And now we're getting a higher low in structure and starting to break out again. So, if we draw this differently, we're really just back testing the wedge that we broke out from, back test and moving. There's nothing bearish about this chart. We're getting above the 20. Price could be very bearish at this point. So look at all of those. We'll give you more information tomorrow, but I think this price action is going lower. And I think that we'll ride our puts all the way into our target areas. So keep an eye on SPY, QQQ, SMH, the VIX, and I think they all had lower. Maybe a reaction here. Nothing goes in a straight line, but just remember, if we're looking at that 2021 playbook, then these moves can be massive. All right, top of 2021 right here, made a lower high. Look how deep that move was. So we had our high here, retraced almost to that high again, just like we did this time, and then a very sharp move to the lows. All right, in 3 days, got all the way back to the lows, and then made new all-time highs before breaking down. And that's the exact opposite of the Qs. So I'm still really looking hard at that situation right here. Had the all-time high, mimicked, went down with SPY, but led to the downside. Didn't quite come up as far to retrace, and then made a new low. All right, that's still possible. It led the market down while SPY didn't quite get past the low, had a higher low, and then a nice slingshot retracement, an 88% retracement that I was talking about, didn't make a new high, and led the market much lower at that point, breaking the consolidation sideways. All right, and so when I talk about consolidations breaking, this is a range break. This broke down just like in the smaller time frames, and then back tested and went lower. So that's still possible in that lower time frame scenario I was talking about. All right, that's what I got for you guys. Thanks for joining us here at Options Center. We'll talk to you tomorrow.